Good afternoon, everyone, and welcome to the NFP live trade. Can I just do a sound check? I just want to make sure everyone can hear me. I'm getting an audio feedback, but I just want to make sure that you guys can hear me. Can you guys hear? You can just type in Y. Okay, cool. All right, excellent. And again, just to start the introduction from the beginning, welcome to the NFP live trade. This is the 1st of April, 2022. My local time is 20 minutes past 2 p.m. So I'm GMT +2. My name is Russell Shaw. I'm the Senior Market Specialist at FXCM. Here's my email address, rshaw@fxcm.com. And I'm just going to bring up our high risk investment warning. I'll keep this on screen for a few moments. And I just want to confirm that we will be doing a live trade on a live account. This is a personal account of mine. So if I'm sort of make any pips, I'm making pips. If I lose, then I'm losing pips. But just in terms of transparency, the position is going to be a small position. So I want to make that very, very clear. I'm just going to put up the market commentaries disclaimer as well. What I have found the way that I find that the most benefit that these webinars actually give is stop loss control. So whilst of course we all want to hit our take profit, I would emphasize that stop loss control is an important item to concentrate on as well. And I'll try to talk through it if we are able to move the stop. We may not be able to. Here's our references, MarketScope 2.0 and ForexFactory.com. I'll just show you Forex Factory. This is what we're going to be using to get our data. It doesn't really matter. There is going to be a lag with the Forex Factory. It is not really of concern to us. So I'm going to tell you how we're going to do the trade in a moment, but you can just see that the number expected is, according to the Forex Factory, forecast 492,000. Unemployment rate, they're looking for a slight improvement on the unemployment, but I mean, we're really very low here at 3.7%. And they are expecting some average hourly earnings to come in. Again, the average hourly earnings is probably for me, a key focus, unless there is a huge surprise with regards to the non-farm employment change. But last time there was a lack of any sort of inflation, and if we got into the trade and it tended to lose volatility. I think we came out with about 6 pips. Also, I closed the trade by mistake and had to reopen, so it was just a little bit of a messy trade. But the point is, the dollar actually started reacting after our allocated time in the way that we thought it should. My reasoning is because there was complete lack of any sort of inflation there. Let's just bring up our Microsoft page. Just going to tell you how we're going to run the trade. So first of all, our take profit is going to be 20 pips. So if we hit our take profit, that's a measure of success. We're also going to measure if our stop loss is kept to only 20 pips. We're going to treat that as a success. It's a 1-for-1 reward to risk ratio, which is not ideal, but that's for a separate discussion. If we can close at a stop loss less than 20 pips, that's I think a big emphasis, which is probably something that I'd like to be emphasizing more of as we go forward, because that just seems to be where these trades go. We tend to typically miss the take profit because the volatility has just in the recent non-farm payrolls has really thinned out after the initial impulse. We've got about a minute and a half. We're going to wait for the initial impulse. Either it's going to shoot up or it's going to shoot down. We're then going to wait for the correction, and then we're going to try and take this leg. Okay, so we're trying to get the second leg up. So that's how we're going to be doing the trade. Let's just take a look at the clock here. All right, we've got just over a minute. In terms of the platform templates, we're going to do our trading on the 1 minute. Okay, I do have an hourly here, so I can see where the pivots are, because the pivot resistances are pretty good. For 15 minutes, probably something we will not look at all that much. I just want to go back to the clock. All right, we've got 30 seconds. Just want to make sure. All right, so we've got open entry. Okay, so all the information should be there when we enter the trade. We should get it. Okay, 20 seconds. So we should get some sort of spike coming in 15 seconds. 5 seconds. Let's see what happens, and then we'll make some sort of inferences. Okay, we should get a shoot now. Let's see. Here it goes. Okay, so euro climbing against US dollar. It's a very average move. So there's obviously some sort of confusion with the numbers. The initial shoot was to actually short US dollar. Now it looks as if money's turned around and it's going into the US dollar. Let's see if we can get some numbers here. Okay, there we go. There's the shoot. Okay, so there's the impulse. Okay, let's just go back here and refresh. So we've got payrolls of 431,000. So we're under. I just got that off a Twitter feed, which is not on screen at the moment. Let's just refresh here. Remember, we want to take a look at the average hourly earnings. I think that's going to be really important. 0.4%. Okay, so we've got some inflation there, but the non-farm is down. And we've actually got a tighter unemployment. All right, let's put this aside. This is a very tough chart to trade, guys. We've got this huge long-legged spinning top right in the moment, and okay, here, so the impulse seems to be continuing. Let's just try and track this. So it looks now as if the market has settled on longing the US dollar. So they're going short euro, seems to be going long US dollar. Why would that be? Potentially because of the inflation there, potentially because of the tighter unemployment rate. Let's just continue to monitor. I just want to see if there's any comments that I'm missing here. No, we're all good. All right. Still tricky to trade this. Okay, so let's just track it. Let's just track it. So at the moment we've got no position, and there still seems to be a downside bias. In other words, seems to be a movement of short euro, long US dollar. But the volatility here is now starting to slow down. How do I know the volatility is starting to slow down? Look at the size of this candle. So the first two candles, massive volatility to them, and now that's starting to thin out. Okay, let's just carry on watching this. Still confusion. Why is there confusion? Well, the truth is that we have now got an inside bar. Okay, this is a little bit more encouraging. This latest candle here has got what we call a lower high, lower low. So again, the directional bias coming in. It still seems to be favoring the dollar. Okay, why would it be favoring the dollar? I would suggest because we've got that wage inflation coming through. Okay, the Fed has signaled that they are really worried about inflation. They feel that the labor market is fairly stable. There are other factors, stagflationary factors, but right now, whilst we're in the middle of this news release, it looks as if the market tending to focus on that wage inflation. Let's see if we get a bounce here that gives us an opportunity to go short. All right, now we've got to be quite astute here. Is this a bounce that is suspect? Okay, is this because you've got this big spike there, now you're getting a spark up. Our question is this a suspicious rally? Okay, so we're going to, we'll use some short-term candlestick analysis to try and assess how strong this bounce is, and what we're looking for effectively is something like this. Assuming we still want to go short, okay, what we want is a pattern like this. I'll explain it in a moment. Okay, so you want at least 3 candles, and you want the middle candle to be the highest high, and then you want to see price take out that reference candle's low. So that's why I've got this horizontal here. I'd like to see a close below this this reference low, and I would suggest we'll put on a short position then if we can get that signal. All right, 30 seconds left for this candle. Okay, now we want to just see if it closes. Okay, it's got to close below. That breach doesn't count. Let's close below. We're using that as a filter. All right, 7 seconds. It looks as if we're going to have to wait 1 more minute just to see if we get that breach. Okay. It's effectively a safety mechanism. We don't want to commit to something that hasn't proven itself. So we want the bears to prove themselves here. And the way that they're going to prove themselves is they must take price to close below these reference candles. Now, I must also just add that we are very close to the tick. This is a 1 minute chart, so it's fairly random. Just by the way, these are reference candle reversals, pivot candle reversals. They're more solid on higher time frames. Let's just see if we can get the signal that we need. Otherwise, we won't be able to allocate. If we can't allocate, that in of itself is a position. Not having a position is a position. All right, let's just carry on following. Oh, there's a gap here. Okay, let's just take a look here. Okay, we might switch it to a long position here because of that gap. Here's the reference candle. It looks as if we're closing nicely above that reference candle. Let's just keep an eye on that. 30 seconds to go, and then we'll see if we can take some pips. Gee, very tough trade this. Look at that fade out. Okay. All right. Sorry, we're going to have to still be a little patient here, guys. I'm begging your pardon, but we just need to make sure. Okay, there's the bullish push. All right, there's another gap here. We'll go long here. All right, let's see. Here's our stop. So this is should be 20 pips here. Yeah, 20 pips. All right. And here's our take profit. Okay, just to give you an idea. So we went in based on these, there's a gap there and there's a gap here. Now we're going to track it. Buy it ask, we're going to sell it bid, so we'll just switch this to the bid, so we can make up the spread. And now we want to start tracking our stop loss up. Okay, the volatility is starting to run flat, so we'll keep an eye on that. I also want you guys to keep an eye on the stochastic. I know it lags, but it's a really, really good indicator in terms of the mathematics. It's got a simple mathematical formula behind it, which is extremely powerful. If we can get the stochastic to hit the 80 level and hold, that would suggest bullish momentum. Okay, if it hits at 80 and folds, then that bullish momentum is starting to wane. That's not a good sign for us. We want it to hit 80 and we want it to hold that 80 level. Let's see if that's the way it's going to go for us. Okay, still very now it's gone very thin, the volatility. So I want you guys to just keep an eye. Let's take this the percent K out. Sorry, let's take the percent D out. I beg your pardon. Let's just keep an eye on the percent K. Okay, that's going to help. We want that to stay in that 80 level and hold. That's going to suggest a momentum. In the way that we would explain that, you can see it runs between 0 and 100. Okay, forgetting about the slowing factors, we're looking over 15 minutes because this is a 1 minute chart. So over 15 minutes, it's telling us that the price is in the top, it's in the upper quintile, right? Over the last 15 minutes, we're in the top fifth of the range. Now, if it maintains in the top fifth of that range, then we're doing okay. If it starts coming down, that's no good for us because we're long, right? Now, this is interesting. What we're going to do here is we're going to hope that this makes a higher trough, because if it makes a higher trough, we can start pulling the stop loss up. Okay. Okay, so let's just carry on tracking this one out. Unfortunately, I can see the volatility is now starting to fade, which is not great for us. As traders, we want volatility. All right, let's just keep an eye on this. Okay, just to show you what's happening here. Can you see this candle? This candle here, sorry, I've got the wrong arrow. This candle here, at the moment, has the lowest low. Okay, so this could be a reference. Let's see if it loses that. It's still holding. In other words, we need price to close above this to give us the higher trough. And then we can start moving our stop loss. There's the stop loss management starting to come in. Okay. So at the moment, we still got 20 pips at risk here. Okay, it's 20 pips. Okay, we want to try and get that down to as low as possible. Okay, 4 seconds, we'll get another candle. Okay, we just didn't get what we needed. We're going to carry on watching. We're still looking for that higher trough. Okay. This kind of price action is okay. Prices never move in a straight line. And remember, we're very close to the tick. So the price is very random at the moment. So I just wanted to highlight that. We just need a bit more bullish action. Okay, that's what we want. That's what we want. We've got 17 seconds. Let's just see if the bulls can hold. Must close above our reference high. Okay, so we can see that there's obviously some sort of resistance that we're fighting against. We're not going to move the stock just yet, but we are going to put in a resistance level here. It's going to help us just to see when we break through. See, there's the resistance is quite it's quite thick here. Some sellers sitting right here. Okay, got another 10 seconds here. Let's see if the bulls can push through this. Okay, yeah, I'm going to stop moving this up now. Just putting it under this support here. Right, so let's just see what we've taken out of the. Okay, so remember we were at 20 pips, so we've taken roughly about 10 pips off of risk off, and that's because it looks as if we've got this higher trough. You see that? It looks. There's the impulse 1, 2, 2, 3, and now I'm hoping this is the next impulse. Okay, we're still battling with this resistance, but that's why we've moved up. Okay, I don't want to move it up to under this to this level here. Theoretically, I could. Okay, I could put the under the last sort of trough, but we're at the 1 minute. That 1 minute is so close to the tick. We're so random at the moment. I just want to give the price a little bit of room to breathe. Hopefully, I haven't given it too much on the leash, so to speak. Okay, keep an eye on this stochastic. It's starting to roll over. That's not a good sign. Okay, we want it to stay above this 80. Okay, we're just tracking price. We're trying to pay as much attention to the peaks and troughs. Let's see if we can pick up the sentiment via the peaks and troughs. Okay. And whilst we are trying to pick up the sentiment, what we really have to acknowledge is that we are moving sideways. Okay, so just bear in mind at the moment, we're range bound. Unfortunately, we're trapped here. So we're not making money. We're not losing money. We're just drifting. But that's that's what the market's giving us. Okay, there was a gap open there as well. So it's really interesting. So we've seen now the third gap come in here. Gap, 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 all bullish. So just interested in that. I mean, what's causing these gaps? Although we want to be very careful here. Okay, so there's the gap. Okay, and this is looking a little bit like a head and shoulders now. So we just want to be very careful here. Okay, that's good. So the gap's still in play here. 2 seconds. Here's the next candle. Okay, let's track this. Okay, it looks as if there is some sort of bullishness hopefully coming through. What we'll do is we're going to put in another yardstick here because there's clearly resistance here. If we can get above this resistance, we're going to move the stop loss up. I get the risk out. It's all about, I really want to emphasize the stop loss control here. If we can get this stop loss up, I think that would be a job well done. All right, 20 seconds, okay. All right, I'm going to just push this up now to just under the moving averages, and I'm kind of going to use the moving average as the stop loss. So we've gone from a 20 pip risk, okay, to 2.4. It's clearly resistance here, so we could use this as the next yardstick. Okay, 20 seconds, we get the next candle. Hopefully we can move the stop into at least a profitable position. Still resistance there. I'm not moving the stop until we've conclusively beaten that resistance. Otherwise, we'll take the 2.4 pip loss, beat that as it may. But we really want to beat this resistance here. If we can get rid of this arrow, that's not needed. Keep a look at that stochastic. Look how it's just surfing that 80 level. If we drop below that 80, again, I want to reiterate, that's a bad sign. That means the underlying momentum is waning. We've lost that upper quintile. Okay. We're right in the middle of this resistance. Keep an eye on that stochastic. You can see it's dipping here. Okay, so this is it's looking like the reaction. It looks as if this is a reaction level. Let's just see. Here's the next candle. Let's see what happens here. Keep an eye on that stochastic. Okay, we got 10 seconds left here. It's getting pretty close to our stop. Let's just start tracking this. See if this becomes a higher trough or if we do get stopped here. Let's see. Okay, 27 seconds. We're very close here. Okay, this is a lower trough now, so certainly weakness starting to seep in. The stochastic falling over. That should hit us. There we go. All right. So I think the takeaway there, again, I want to emphasize the stop loss control. We moved it right from that 20 all the way up to 2.6. Unfortunately, we just didn't get the bullish momentum that we needed. It's all about hitting that upper quintile and maintaining that upper quintile, and that's generally when the swings happen. Nevertheless, reducing from 20 to 2.6, I think we did pretty well there. I hope you guys enjoyed that, and we will of course do another one next non-farm payroll. So thank you very much for joining me, and you guys can email me rshaw@fxcm.com if you have any questions. Thanks very much, guys.